Welcome to the Financial Freedom Mastermind Group podcast. Here we're all about breaking free from the 40 to 50-year work grind and accelerating our journey towards financial freedom. Join us every Wednesday at 7 p.m. Eastern as we explore different types of investments that can fast-track your path to financial independence. We serve as a hub for connecting with fellow members during our sessions so you can share successes, ask questions, and keep the momentum going.
Everyone, my name is Niyi Adewole, host of the Akaba Home Financial Freedom Mastermind Group. And today we are excited to be joining you in the middle of March. And it's just exciting to be ending this first quarter of 2024. Time goes by so fast. And tonight we're going to be having an open session, and we're going to do it a little bit different tonight. Tonight, we're going to have my co-host join, Liban. But what we're going to start doing during these open sessions is we're going to use the beginning portion to dive deep on a certain topic and really start to dig a little further into it. And then we're also going to open it up to the rest of the group. And so for tonight, first and foremost, Liban, how you doing, man?
I'm doing well. Thank you for asking. How are you?
I am super good. Acting like I didn't just see you a couple hours ago.
Well, I'm doing super well now that we made it past due diligence, you know?
Hey, come on now. Yeah, it's always, that's the hardest part, right? Getting past due diligence, both on personal deals and for clients. But once you do, that's when you can kind of, relax a little bit. It's good.
100%.
But today, before we open it up to the rest of the group, we're going to dive deep on the 1% rule. This is something that we talk about to a lot of clients and we help coach individuals on. And I like using rules of thumbs for the upfront, right? We use rule of thumb for our long-term rentals, for our short-term rentals. But I don't know the last time we've actually had the full-on conversation and, okay, why do we use that? Is it even viable in Atlanta? And why does that number kind of stick out? And I personally wanted to jump in and kind of explain what the 1% rule is to begin with. And so the 1% rule is a rule of thumb, and it basically says if you're buying a house for, call it $100,000, if you can rent it for $1,000 or 1% of the purchase price per month, that's a deal that you should go after, right? And it's a way to run through a bunch of deals quickly to understand, hey, does this work? So that you're not spending, 15, 20, 30 minutes analyzing, a bunch of deals and wasting your whole day and getting burnt out. And so the way that works practically is we try to find houses where it's getting close to that 1% rule. But one of the things I wanted to dive into, even before we start allowing people on, is whether it's viable in Atlanta. And so, Liban, before we dive into that piece, any comments on the 1% rule?
Well, one, of course, I was going to ask a lot of people, and this is a great time for you to answer this, the 1% rule, you say generally it's good. Does that include the mortgage, for instance, when you say expenses, right? A lot of people will factor in a mortgage as one of the expenses. So when you are calculating that, and let's say a property does hit the 1% rule, would that then cover said mortgage?
It would. It should, right? At the 1% rule, you should be covering the mortgage and it should make sense. Now, this is for a traditional investment, right? So that means putting down 20%, which is traditional. I know we've been getting creative and putting down less. If you're putting down less, it may not work as a 1%er for a long-term rental. And that's when you got to get a little bit creative. But no, that's a really good question. And I wanted to, while we still have people joining, I'm actually going to share my screen here. And I wanted to dive into a live example. And so, Liban, can you see my screen?
I can.
Okay, and you're seeing like a property here for $250?
Grand Ave?
Yes. Okay, so this is an actual property that's out there in the market that we are, I believe we just put under contract. And so the thing about this property is it's a duplex with a 1-1 on each side, right? And it's for $250 because there's some deferred maintenance, things of that nature. This is not common. Let me just give that clarity, right? You're not going to see a lot of these in Atlanta that look even semi-decent, all right?
Yeah.
Okay. So we go into bigger pockets and we're just talking about the 1% rule. Like, hey, is this viable? Is this something that we can get to? Mm-hmm. And so when you look at the rent estimator, this is something that pulls in all the aggregated data for the area. And it'll tell you, hey, what can this rent for based on what other properties are renting for in that zip code and in that area. And so it's a duplex It's a one bed, one bath. And it's saying that with high confidence, based on these other comps that we're looking at in this area, that you could pull a median rent of $11.95. This is not saying it's the highest in the market or the lowest. This is where the most of the properties fall within. And so at a median rent, which is what we use when we're helping our clients, you could pull $11.95. Now, Liban, can you help me out? What's $11.95 times 2?
So I'm just rough mathing it. So we're gonna go to 1,200 just for easy math's sake.
Fair enough.
224, right? Take away the $10, you know.
Hey, that was a test to see if we were still going to keep this on the team. So okay,
you do enough of these.
Liban, you passed. Exactly. So it's not quite hitting the 1% rule, but because this is a live example, this is a good one that we can plug in. It's not quite hitting the 1% rule, but it's very close. If we actually had to do the numbers on that, right? You said 2390 divided by 250,000. This would equal 0.956, right? So it's pretty close to the 1% rule.
Now, question for you, right?
Sure.
This is assuming that we're the median, right? What if I'm a homeowner that I can say, you know, well, I renovated mine. I should be in the top of the market. How do you go about determining what is the margin in which I can upcharge versus undercharge?
Man, this is a great question. And that's when you start looking at the pictures, right? So the median rent is great, but then you need to see what's actually out there. Like, this looks reasonably well. They got granite countertops or quartz countertops. You got some nice cabinets that are paintable. Like, this looks pretty good for a one bed, one bath. This is like, hey, I like the outside. And so you would probably be toward the top of the market. What I tend to do when I'm looking at, okay, where should I list my rental at for my personal rentals? I look at what's out there. I'm going on apartments.com as if I'm a renter. And I'm saying, okay, for this price, what am I getting out here? And then I look at mine and then I look at theirs. And if mine's a little bit better, it means you can charge a little bit more. If yours is a little bit worse, it's where you got to come to grips with it and understand, hey, I'm going to be at the median or maybe a little bit lower. But this one, I would comfortably say could probably go for a little bit more. That being said, when we are working with our clients, we focus and just use the median price so that they can make that estimate if they want to go a little bit higher, but we're a little bit more conservative. And so for this one, we're going to use this price, even though I believe, to your point, we could potentially get $1,250, right? You get $1,250, that's a 1% rule, but we're going to use $11.95, which is the high confidence median rent for the area for a one bed, one bath. So now, keeping that number in mind, we would go over to the rental property calculator, and this is what I'm talking about. So we know at a high level, this is pretty solid. It's like, okay, that's pretty close to the 1% rule, but why? And so this is where we pop it into the actual full report and we run the full numbers. And so when you go rental property report, I like using bigger pockets because that's how I got started. We could put the purchase price at $250. The closing costs are going to be about 3%, so $7,500. Now we're talking about traditional investment, so 20% down, right, for traditional. And the last 20% down we did a couple, maybe 2 weeks ago. They got about a 7.5% interest rate. This would be a 30-year term. And for the gross monthly, we're looking at $11.95 times 2, which is $23.90. Taxes, it pulls it in from county records. And then for insurance, for this property, it's pretty small. It'd be about $100 a month. Repairs and maintenance. Go ahead, please.
Question. Yeah. Now, if someone wanted to find out, hey, what the insurance is, we typically with Zillow, for instance, because they have an insurance estimate. Can you go with the Zillow guesstimate on the insurance if I didn't want to call up someone and do that method?
Absolutely. And Zillow's typically come in a little bit higher than what it would actually be. But to your point, Liban, this is a quick way of running the high level numbers before you tighten it down. And so Zillow has the home insurance at 88. So we actually have budgeted more and it may be less than that. So we're going to pop it in at 88, right, for the insurance monthly. And to your point, Liban, these are pieces that you can start to tighten up once you get a deal under contract. We have insurance brokers that we work with and different partners that are able to get us pretty good deals, especially as you start to grow a portfolio. And quick side note, and we'll come back to this. When I was first growing our portfolio, I was doing what everybody else did, right? I went to, the State Farms, I went to the Progressives, and I got one insurance here, one insurance there, one insurance here for this particular house. Once I got to about 4 or 5 homes or units, I talked to an insurance broker and he looked at it and he's like, dude, you could save a heck of a lot if you did portfolio insurance. And so in 1 year, he was able to get me basically and this was, I had a bunch of units. I forget exactly how many when I actually went to him. He was able to get me basically take my insurance cost from like 6,000, right, down to like 3,000. He cut it in half.
Wow.
It was nuts because they looped it all together, and it makes it less risky.
Cash flow by what, 50% on the insurance savings there immediately.
Quickly. It was amazing. And I got a check in the mail because we cut that insurance midway through. He's like, "Nee, you mind if I cancel?" I said, "Absolutely, cancel that and send me a check." So long story short, this is one where you can start to utilize economies of scale as you get bigger, and this is huge when you look at insurance costs starting to rise across the country. Now, when you talk about repairs and maintenance, I typically put in about 5% for that. Vacancy, I'll typically put in about 5% for that. Again, you should check your local market and kind of pull those statistics and or check with a property manager in that area. And then for CapEx, I usually put it at 3% because if there's major items initially, you should be taking care of those if there's a major item initially. Now, this home looks pretty solid.
And real quick for kind of people who don't understand what CapEx is, because, they're assuming, I already do my repairs and maintenance. Why do I have to do another CapEx? Could you explain kind of what the differences between those two are?
Absolutely. So repairs and maintenance is more like handyman related things. Hey, my sink is dripping, or, there's a hole in the drywall. Okay, let me send the handyman out. The lock's not working. Let me send the handyman out. CapEx is for the big items that are going to deteriorate over time, i.e. your roof. Your roof is going to last for a super long time, 20 plus years. And then one day it's going to go out, right? And that roof repair is going to cost $10K. And so the CapEx is there to build over time and allow you to be able to pay for that piece. So if you look at the CapEx monthly, right, we're saving $71 a month. In a year, that's close to $900 in a year. Over a 10-year period, that's multiple thousands of dollars that will help cover a water heater going out, the roof, furnace, HVAC, things of that nature. Fair enough?
Yes, sir.
Okay, and then for management fees for this one, this individual is going to manage themselves, but we'll come back and show you what that could look like with the management fees and kind of adjust that. And then this is a duplex that's separately metered. So the cool thing about that is the tenants pay these fees, right? So you're not paying those fees. So we're going to finish this analysis. Again, this is not exactly at the 1% rule. It's a little bit below that, but let's see what we came up with. So with this deal, right, you're looking at $277 a month in cash flow, which is about $130 or so per door, which is not bad for a 1-bed, 1-bath as long-term rentals. If you wanted to boost this is where you can get creative and start doing some strategies that we've implemented where you have, hey, one side be a short-term rental, one side be a long-term rental. But for not having to furnish this, just coming with 20% down, this one out of the box is going to work. And then to your point, Liban, if you were to boost the rents to like $1,250 each, now you're really cooking. But your mortgage is looking at $1,398. And the piece to remember when you're looking at deals is you're not looking at it for 1 year. Literally, the best example I can give, and it's easier to see after you've gone through a full cycle of a property, but the first property I bought was a triplex in Louisville for $190K. And when I bought it, I lived in one unit, rented the other two out. When I lived there, my mortgage was $1,350. The other two units were bringing in $1,400. And so I essentially lived for free. It was amazing. Like I was like, wow, this actually works, right? And then when I moved out, I rented my spot out and I was getting $2,200 a month in rent. So that's pretty good. I'm like, okay, this is awesome. Fast forward 4 years, when I went to go sell that property, it now appreciated from being worth $190 to now it was worth $310. So when I walked from that closing table, I walked away with a 6-figure check that I didn't necessarily work for. Yeah. And also the rents had appreciated from $2,200 when I left to $2,850, right? And so my mortgage didn't change. My mortgage is still $1,350. It might have been a little bit less, right? So it's like, okay, because your escrow and stuff and the insurance and things of that nature can take it lower. And so with that in mind, you got to keep the bigger picture and the long-term goals of, hey, over time, I can increase this by 3 to 5% a year. But this is a good starting point for a long-term rental.
100%. Yeah. A lot of people, I don't think, also account for the fact that, hey, maybe year one, I'm not making a ton of cash flow, but next year, if the tenant leaves, I can raise my rent $50. $50 on 2 units is an extra $100. Now we're at $377, right? So, and a $50 increase from a tenant standpoint, I'm not gonna move completely out of the way for $50 extra a month. So
yes. And to your point, Liban, and I'm going to go on a complete sidetrack. That's the key. That's the fun part of this that people don't understand. Like if you can own a couple of these early and start to increase it over time, you're going to get a heck of a lot more and you keep the same people. So for example, now when you extrapolate that out to the deal that we have in Louisville with the storage, that's the piece I get excited about the most, because with storage, it's really like minimal pieces. So we're charging you $100, right? You've got all your stuff in here. How much is going to cost you to move all that stuff? Time, money, effort to move it, and you got to put down payment somewhere else. So if we increase your rent by even 10%, $10, like you're more than likely not going to move. Yep. And so now that we're getting this thing rented out, I'm super excited to start pulling those levers.
It's $10 on 200 units of storage.
Yeah, that's $2,000, right? That's that. Yeah. I can do that math. I can do that math. So it's good. AJ, how you doing, man?
What's up, man? Can you guys hear me? I got this set of AirPods. Okay, cool. I wanted to ask you about that Louisville property, which you said appraised from, I think you said 190 to 310 or 320, something like that. Since you had such a pretty high spread between the mortgage and I'm sure you were getting a lot of cash flow, can you talk about why you didn't continue to choose the cash flow and you essentially went with equity over cash flow?
Yes. This is a great question. And part of the reason is because I'm so locked into the ATL market. And so selling that property allowed me to get the luxury sports art gallery out here, right? Which is essentially a duplex that I have in Marietta, where I'm using it as a short-term rental. And that home is going to appreciate a lot quicker than the one in Louisville. So what I like about Louisville, and this, even taking a step back, this goes back to kind of like a thing that Liban and I were looking at before. Have you heard of or looked at the price to rent ratio, AJ?
I've heard of it.
Okay. So the price to rent ratio is basically the median price in a market versus the median rent that you can bring in that market. And that determines whether it's a quote unquote cash flow market or appreciation market. And so I'm going to give you a couple numbers here, right? Cleveland, Ohio, from a price to rent ratio is a 0.64%, right? That means it's a huge cash flow market. It makes more sense to buy a home out there because it's super cheap, right? You can go get a home for $60,000. You probably heard from some of the people that we've had on the podcast.
Oh yeah.
Yeah, but your rent's also cheap as well, right? It's like, okay.
I'm from Buffalo, so I'm familiar with those lower priced homes. People are still buying homes for like 170. I got friends talking about 180, maybe 200. I'm just like, what? It's insane. So I definitely know what you're talking about.
Yeah, if we see
numbers, man.
Hey, if we see a house for 180 out here, I'm questioning if the roof is working, if it has walls. Like where is this thing located?
That's dirt.
100%.
Whereas if you look at Los Angeles, right, the other side of the spectrum, their price to rent ratio is 39%, right? And so over there, it actually makes more sense to rent, right? Unless you have a super long-term view and you can house hack the heck out of that thing to where you're chopping it up and renting out a lot of portions of it. Now, when you look at Louisville, Kentucky, right? And before I even give you Louisville and Atlanta, when you look at price to rent ratio, if you are 15% or lower, it's more of a buy market where it's like, hey, it makes a lot more sense to buy because the houses are so much cheaper that you renting makes no sense. When you get to between 16 and 20, it's kind of even. It's you can buy, you can rent. Both of them are kind of going to work out for you in the end. And then when you get to 20 plus, it makes more sense to rent because the appreciation is going a lot higher on that market. And so the cost of actually buying a property becomes less attainable. And so what they're thinking about is not us as investors being able to hang on to a property and capture that appreciation. They're just thinking over this short period of time, are you going to make a return on your money, right? If you're renting versus buying. And so in Atlanta, it's a 23.83%, which is right into that. It's right above getting into that the rent market, where it almost makes more sense to rent, right? And so that's why we want to own a bunch of these properties because people are going to rent and choose that piece because it's starting to get less attainable to buy a house. When you talk about the median price being, in the 400s, that's tough for people to afford, right? Louisville, on the other hand, is 16.3. So they just now are in that even threshold. And so when I look at the two markets, Louisville was great for cash flow, right? But the houses were like 1920s. Like there's no new product out there. All those houses had some weird quirks. Like that triplex, I didn't have ductwork in one of the units. I had to put like these mini ducts every winter it would freeze, and I had to send guys down there with like
window units.
no, like the mini ducts, like the in Europe, like the heating cooling units that you would put.
Yeah.
I had to install that, but it doesn't cover every area. I can't put it in every room. So I put it in like 2 rooms and tried to cover, but the pipes would freeze. There was a lot going on, AJ. And so long story short, I traded up from 1900s houses, like 1920s, things of that nature, up to, late 90s and 2000 houses because I believe in this market and all the people moving here. And I want to capture that appreciation.
Understandably so, but on the flip side of that, could you also look at the Louisville market with the older homes and lower priced homes, the lower entry point as an opportunity to maybe want to go in and do a flip? I don't know if you've really gotten into the flip game too much, but maybe, because it's such a low price of entry, you could start entertaining that method, or maybe doing a BRRRR, doing force appreciation and equity just like that, because like you mentioned, these are older homes that kind of need to be worked on, and then you can like I said, force that appreciation. So could you also, on the flip side, look at that as an opportunity as well?
Absolutely. And my realtor, my investor friendly realtor down there is killing it with those. She does a bunch of BRRRR deals personally, and then she does a lot of rent to own, where she'll go renovate a house and then kind of rent it back to somebody who may not qualify and kind of do it like that. And so it makes a lot of sense. The piece that I was running into is, and I think Liban can attest, it's hard to manage a flip. And I know we talk about utilizing others, things of that nature. It's hard to manage from afar. A flip is hard to manage from afar, right? You want to be able to at least swing by.
It's hard to manage while you're there, honestly.
Yeah.
And it sounds all good in theory, but yeah. Go ahead, Leon.
Yeah, I mean, I project manage for people, and I'm like, whoa, and I'm here, and I got free time. This is my only job.
Whereas here, I feel a lot more. I've invested in my backyard a lot, right? So in Louisville, if you looked at, hey, where are your properties located? It was literally within a mile radius of where I lived when I was there. I was, oh yeah, I remember that street. Let's go buy that, right? We kind of just bought like the whole block, kind of like what Desmond's doing. He's buying the whole block. But hey, but now that we're in Atlanta, for me, it made more sense to move it over here. That being said, I still believe in the Louisville market. I mean, it's amazing. You got the Derby, things of that nature. And so you can see what I'm doing. I'm partnering with others. Like that storage thing, if it was just me, believe me, I would not be doing it. But because I have my investor-friendly realtor out there, who's my partner, like we were able to get that thing going pretty quickly. I can't tell you how many late night calls. It's like, hey, how was your day? Well, this is what went wrong, but this is how we fixed it, right? And I had nothing to do with it. Right. And the same thing with the townhomes that we're getting ready to start. But if you're going to go out of state, I'd recommend like partnering up with someone, at least for the first one.
Okay. It sounds
for a flip.
Right. It sounds like it's not so much that you're pessimistic about the Louisville market, but you're just more optimistic about the Atlanta market and the growth and everything, if I'm correct.
Yeah. Plus, you got to look at economies of scale. Like, Desmond, I'm gonna use you as an example for a bit, then I'll shift back to me. You having a bunch of units in one area, it makes it a lot easier to keep an eye on. One, you probably can start negotiating with cleaners too, right? Your management costs go way down because you're using the same folks. And so the advantage that we have out here is that we're working with a lot of the same folks that we use for our clients and things of that nature. And so our costs go way down. And when you talk about even management, I can take a unit on like that. Like it's not that hard. Like if I find a deal and take it down, we can take it on like that because we have a whole team ready to go. Whereas if you're in an outside market, until you build up the scale, it's going to cost. Like in Louisville, it didn't start hitting the economies of scale until I got to about 6-7 units. And then all of a sudden my management fee went from 10% down to 6%. And I'm like, okay, this is awesome. And then all of a sudden my insurance costs start going down and it starts making a lot more sense. But you got to get to that scale. Desmond, how you doing, man?
Man, what's up? I'm chilling. Yo, +1 on, it being hard to manage a flip, afar while you're there. I was managing not really a flip, what turned into a renovation. I live across the street and that shit still didn't go, the way I really had it planned, and it didn't go perfectly. So yeah, definitely +1 to that. And also +1 to like the cost, being able to go down, definitely negotiating with the cleaners. And it's funny because on this, new short-term rental that I have set up, which actually went live just a few days ago. It kind of got delayed a few weeks. My W-2 was, squeezing every little bit they could out of me, but that went live. I'm getting some bookings now, so that's cool. But I'm actually using a different cleaning team because the one I'm using for this building, they weren't really willing to take on the rate that I was proposing. And I'm like, hey, look, like I know what the deal is now, right? Like previously I was green, right? So I was, pretty much negotiating blind. So I didn't know what, the worth was, or, really what it was going for at all. But now, kind of just having the understanding and knowing, okay, I have a 2-bedroom, the 1-bedroom's going for this much. All right. So the 2-bedroom really shouldn't go for more than this, right? And I was really able to negotiate based off that and get a favorable cleaning rate, I think. So, yeah, man, I'm optimistic. Got some fires that I'm, putting out, but it's how it goes. So, yeah, taking it in stride. It's always fun.
These aren't too big. Hopefully these aren't too big.
Nah, never too big. But
I don't want to say always fun, but I hear you.
Yeah,
you gotta try to be optimistic about it, man.
You gotta make fun out of it. You gotta.
Like
you can never take it too seriously. Yeah, you gotta make fun out of it. But I think also too, you can make a little more fun out of it when you have cash flow coming in and when you're able to fit that bill a little easier. And that I am grateful to say that, I think especially with the multiple units, it makes it a bit easier to, fix a problem in one. So there's a water issue that I'm still dealing with from literally like last year, damn near at this time. So figuring that out.
This is in the quad?
This is in the quad, yeah. So it's in the Airbnb downstairs on the other side. And I had a French drain installed previously. Didn't fix it. It might have fixed it actually for a couple of months because there was a period of time where I was like, yeah, like, this might have worked. But no, after that, started getting complaints from guests again. Luckily, no one has really put it in the reviews. And I think, and I want to say this, I really think that speaks to like, I'm super quick. I think living here helps, but I'm super quick in the messages too to respond. But I'm also quick too to say, hey, like, I understand. Let me give you half of the cleaning fee back, right? I don't want to hurt myself too much, but let me give you, half of the cleaning fee back. There was one guest that I don't know what happened. So I think the previous guest might have had left food and there were some like bugs in the unit. I literally gave them a gift card of $25 after their stay, after having given them back, like, I think the full cleaning fee, and they didn't leave a review. I don't think that they're going to. And I was like, thank God, because I could tank them.
Give you a good review. You're just like, don't
dude,
say anything.
I'm like, don't say nothing. Like, yeah, don't even leave a good review. Don't say nothing. And I don't think they'll leave one. So I really think that like having good customer service and being willing to do that speaks volumes. I think Liban's frozen with his hands up, which is pretty funny.
That is pretty funny. Yeah, Liban, we got to work on your internet, man. But
I want to move it. So it's funny that you mentioned that. My internet, as you guys, I have one of those ones. I got to connect it to the cable. So I installed. I went to Home Depot. We put the cable. So we're moving it in now. We're moving it into the room.
He said, tell us how you fixed it. Wait.
Yeah.
Liban, we're gonna come back to you. I know you gotta tell us how you fixed your internet. It's never gonna do that again.
Dude, we gotta put that on the Akaba home bill, please. Yeah. Sponsor that for the podcast.
I know. At this point, I'm thinking about it, man. No, but Desmond, to that point, I want to give you your flowers, dude. Thank you so much for convincing me and many others to get on the booking.com platform. Because I'm starting to see the benefits now, dude. It's like, there's a couple week-long bookings. And, I boosted that one because I was like, just make that one 20% more. And there's a couple week-long bookings coming up soon for people coming from Europe and all this other stuff. So I'm like,
that's
man,
the cool part. That's the cool part. That come from I had a dude from Germany the other day. I was kicking it with him. They'll come from all over the world, and that's the cool part. Don't tell too many people. And if you do, no, I'm kidding. And if you do, tell them to hit me up, and I'll set it up for them. Right? If you're watching this, I'll set it up for you. But booking.com, dude, there's definitely value there. I want to get to where you're at also, and I'll give you your flowers for this, right? And having a full like direct site and like getting to having direct bookings, because those I think through Hospitable are shown on Google, which people are still using, right? ChatGPT is a thing, but I think people still use Google to, find stuff. So I think that's valuable. But yeah, man, booking.com is, it can be gold for a long time. And even still, I think a majority of my bookings come from that. And I think primarily because of the airport, but yeah, would recommend.
That's amazing. That's amazing. AJ, how's it coming for you, man? We haven't touched base on the property and the bookings in a minute, but is it picking up for you?
Yeah, things are going pretty solid. I definitely know I'm coming into a full year being an Airbnb host. So I think in going through that, you have to learn, especially in Atlanta, like what months, like figure out the cycle basically. And where I thought the wintertime would be more of the drought season, it actually was like one of my best seasons for me because there were so many different events going on in Atlanta, like October, November, December. And where I'm from is just really around that time is just cold and boring. Nobody wants to come to, Buffalo. That's where I'm from. But I had that mindset, and then it was like I struck gold. That's what at least I felt like. So those are some of my best months. I think I'm realizing that January and February, those are definitely, for me at least, the drought months. It's pretty dry here in Atlanta, not too much going on. But then shortly after that, March definitely picked up for me. And I'm pretty sure April is going to pick up on a rolling basis as well. So,
absolutely. And one thing I want to mention here, we've talked about it before, you just got to put yourself in the game, right? If you put yourself in the game, you give yourself an opportunity to hit some home runs and get some wins. And a couple wins that happened over the last week. I think we talked about before that fourplex purchased up in Snellville, right? Turned 2 of those into short-term rentals, 2 of those into long-term rentals. And the numbers did not necessarily support a short-term rental in Snellville. I just was driving up the street. I saw all the La Quintas and everything. I'm looking at the numbers. It doesn't match, but I think we can beat, what a La Quinta is offering, right? And an extended stay Holiday Inn. And so long story short, we've had this guest that has stayed with us through Airbnb. Then they booked direct, Desmond, twice. And so it's been 2 months they've been with us. And they finally reached out and said, hey, I think we're going to need another 6 months. What can we make that look like? And so long story short, they're going to be paying $3,200 a month. We sent out the agreement for them to sign, and they're going to be here for 6 months because I think they're building out like a church or something. But they're going to be here for 6 months, paying $3,200 a month. Cleaning fees go away, and so if you build it, they will come. But that's roughly double what the tenant was paying that lived there before, and so that's incredible. And so if you just put yourself in the game long enough, you'll get some of these windfalls.
Right. I did want to circle back to you guys so hype about booking.com. So I'm extremely curious about that because I've been on booking.com since I've basically started running my Airbnb business. And I don't know what it is, but I'll get bookings. See, the weird thing about booking.com is it's not like Airbnb where, the guests will book the place and then you confirm and then it's all set. Booking.com, they have to basically send a request to book. You have to accept it or decline it. If you accept it, then it goes back to them. And then they have to basically confirm the payment. Correct me if I'm wrong, but I'm pretty sure that's how it works. Anyway, I say all that to say, I've had numerous bookings and then people never follow through with the entire booking. So they never actually book on booking.com. And this has happened so many times to the point where I probably can count them. I can't even count on my 2 hands how many booking.com bookings that I've had that they haven't followed through and then it gets canceled. So I'm just actually very curious how you guys are so hyped on booking.com because I still have yet to source a booking.com booking.
I would say,
and AJ,
yeah, go ahead.
AJ, I'm gonna kick it to Desmond here relatively quickly, but I'm gonna level with you. I don't set up booking.com because I tried initially and it wasn't set up right. I had my first booking come through and that guest expected to pay on site. I was like, hey, I think I'm doing this wrong. And so I went to the resident expert and I actually, no, I'm serious. This is a true story. So I was like, hey, so I hire an expert and the expert is Desmond. This is my go-to. And he helped set up all the properties. So I would consult with him.
am I doing something wrong? This makes no sense. And I'm definitely not accepting money at the day of the reservation.
At the door.
So if you're recommending that, I'm out, but I'm not doing that. But I need to figure out, especially if you guys are saying this working, like I'm like, I have to be doing something wrong. I haven't gotten one secure booking yet, which is extremely weird. Now I'm not too upset because my Airbnb business and booking it's taking care of things. Right. However, obviously the goal is to have as much exposure as possible. So if I can get the booking.com up and running the proper way, then that'll make me even a happier man.
Yeah, I would say definitely get with me, right? And we can, go through your listing in depth. Like I sat with Justin Parham, Niyi, shout out to, you for throwing him my way. And we looked at his listing and it was dope because like a week after he sent me a text and someone booked it for like 5 nights. And I was like, all right, like this shit actually kind of works. No, but that was cool because that was kind of like my first like real client outside of Niyi. So I'm like building this thing up. But yeah, get with me if you really want to like look into it. But I think one thing kind of to your point, and the reason that we don't deal with that is just because we allow instant bookings. I know I allow that on my listings. Niyi allows that on all of his. And I would ask you, how many bookings, right, and on B&B as well, are you, like, what percentage are you declining, right? And
yeah, very low percentage.
None, right? So, like, at that point, it's like, why put folks through the extra step of having a request and then you having to go and look and see it and, you look at their profile picture. So it's like, at that point, I kind of decided from the beginning, I'm just gonna I'm gonna open up the floodgates. Like I said this from the beginning, like if your money's green, like you're good with me, you can sleep here. No, and that did bite me in the ass a couple of times, but I was
very slippery slope. I feel like
it can be, but I think sometimes I got too money hungry and I was kind of stepping out of like what I should have done. So I was going outside of the platforms, and that really bit me in the ass. Like I was taking money through Cash App for the first few months. I know, which now sounds like crazy, but at first I'm like taking money through Cash App, but at least I'm like sending people like the little contract, like 1-page thing to fill out. It was, probably bogus, but still, right? I would say that's one thing you could try out and just see what happens. Most likely, I've had it open for a full year, and I've had one girl throw a party. And to be honest, I think at that point, I didn't have specifically on the listing it marked like no parties. And I was like, all right, like you got me there. Like, I'm like, I can't even like fault you for that because like I didn't have it turned on. Like I would have did the same thing. So I would say, try it out and see. And it can be a game changer, low key, at least to, pick up those like 1 or like 2 days in between, right, where you are like missing spots. But if you want to like really go in depth to it, like I'd definitely be down and sit with you, and we can talk more about it. And I want to plug more into like other platforms too, because right now I'm just kind of on B&B and booking, and I think to the point about direct, I want to get there as well. But
dude,
I want to figure out like
with the number of units you have now, like it's worth it. It's needed. And now when somebody books with you once, the way we have it, and I forget exactly how we have this set up, but when they book direct, or when they book with us, right, through Airbnb and things of that nature, they also get an auto message afterwards, and we put signage up in the house that says, hey, next time book direct, save on fees. And so that's how we get people off platform and they start booking with us and extending with us. And then now they're looking for our platform, right? They're like, okay, hey, if we're going to come stay here, next time we'll book with you. And we've had, I keep coming back to this one musical guest that stayed with us. He stayed with us 6 times, right? Same location. He didn't want any other house. He just stayed there 6 times, right? Over a course of a year, which has been awesome.
So I thought that that Airbnb specifically didn't like you, like trying to poach people outside of the platform. So the message that you're sending, is it telling people to like specifically go outside of the platform, or like how are you wording it when you say it?
So not so much. We're not sending it through the platform. That would be, you don't want to do that. We're after somebody books, you get their contact info. Right. And so we're sending it to them through either an email if we have that, or a text message after, hey, thank you so much. Here goes the link, next time book direct. And then also just to make it really easy, if you don't have time or want to set all that automation up, just put posts around your house. Like we put one that has a picture of maybe, it's like a collage. We put it on Canva. that has a picture of like 3 or 4 of our B&Bs, unique pictures that look cool. Underneath it says, hey, scan this, book direct, next time and save on fees. And people will book through that even while they're staying and say, okay, I want to extend. Let me go through your direct site.
One thing I've heard too, sorry, I was going to say one other strategy I've heard just on that point of like putting up signs is also, and I was thinking about trying this out, is like when people will add, like join the Wi-Fi, kind of doing it how like Starbucks and they do it like, oh, you got to add your email to like join on, and they're like, all right, like I'm gonna join the Wi-Fi, like here's my email, and then you can send it to them after. And I would try to automate it because I'm not trying to send out all them text messages, but yeah, definitely, I think that's those type of strategies I want to employ this year because it's useful. Sorry, AJ, I didn't mean to cut you off though.
No, it's good. I was just gonna say I was just recently I stayed at a B&B in Clearwater, Florida. Had a little vacation, and like the host is sending me tons of messages at checkout talking about like, oh, book, like basically like off the platform booking. I'm like, I'm a host myself. I know this. You're not supposed to be doing this. I'm like, this guy, but I'm like, hey, it's his property. So yeah, like I was like, whatever.
Hey, get it how you live.
So for me, is it? I know you're not probably sending out the text, right? Is it automated for you, or do you have like a team member doing it?
Right now, we got a team member. Honestly, I need to tap back in and make it automated because it's to your point. It's just one extra step, but it's not me doing it, so I don't think about it every day. So yeah. I do need to step in and take that off of somebody. I do need to step in and I'm working on different things. Yeah. But no, yeah. Right now it's manual. Right now it's pretty manual. But the signs is a nice subtle reminder as well, right? Just that's an easy one. You print it out, the same thing, put it up everywhere, and kind of go from there. And then we also have like the no smoking on site signs. I think we've looked at all that stuff before, but yeah, we put that in every house.
Mm-hmm. Yeah.
But what else you guys got? Anything else top of mind?
Yeah. So back to how the conversation had started, and this kind of piqued my interest. So you started off with like the 1% rule. I was curious to know what you guys thought of the 15% rule. First of all, do any of you guys know about the 15 rule? 15%?
For Airbnb, right?
Short-term rentals, yes.
Mm-hmm. Mm-hmm.
So if you don't know about everybody. Yeah. So okay. So then I won't explain, I guess. But
no, please explain it because I don't know about it.
Okay. Whoa, so it's kind of yeah. So it's basically like as you're analyzing a deal, right? As Niyi showed us earlier with the 1% rule, you want to before you go and consider a deal, basically you want to make sure that the 1% will cover basically the expenses, right? And it's kind of the same with, or similar with the 15% rule. So basically, if I'm looking at, say, $1 million property, right? And is 15%, will this property basically generate 15% in yearly revenue? So if we look at $1 million property, right, 15% of that $1 million would be 150 grand for the entire year. So for a short-term rental, if I wanted it as a short-term rental, right, I would want that $1 million property, if I'm purchasing at $1 million, to basically bring in 150 grand on a yearly basis. If it's not, then maybe I wouldn't want to consider it. But if it is, or maybe if it's greater, then yeah, let's continue to look into this deal. So that's basically what the premise of the 15% rule is. And I know a lot of other investors that use it. And I just kind of want to know your guys' opinion on it. Do you use the 15% rule? Does it not work as much? Can it work in the Atlanta market? So I kind of want to kind of piggyback on that discussion from earlier.
Yeah. Liban?
So that's exactly actually what we use when we're underwriting deals for our clients is we want to have minimum 15%. Obviously, we want it higher if we can find higher. But if something is under 15%, we don't even show it to somebody. Unless, of course, we can slash the price, and we've had discussion with the agent about that piece. But yeah, it's 100% a rule we use daily. I literally did it today. So, okay. Yeah.
And to that point, piggybacking off of Liban, it works, right? When you're looking at the 15% rule, it's similar to the 1% rule. The reason we use these rules of thumb is so that you can identify quickly if a property is going to work, because it's easy to plug in an AirDNA and see, hey, does it hit? If not, let me keep moving on, right? And for example, this is a house that we have under contract for a client. It's going to close at the end of the month. And this is one where it's like, okay, does this actually work, right? Because when you look at the purchase price, it's a heck of a lot. This is getting close to that million. So it's like, this needs to work out. The cool thing that we do, though. Huge house, right? And the cool thing about this is we have history, right, with the mansion that we manage that alludes to this fact that, hey, that 15% rule is real. Like it actually works. And so this is what I mean when I say that the Snellville property didn't hit the 15% rule. That's why I'm saying like the numbers didn't really make sense from a short-term rental standpoint. But I was like, hey man, like if we build it, they will come because we've done enough of them. But for clients, we typically, especially for the first one, are like, hey, you need to hit your 15% rule and kind of go from there. But this
like
property,
anything we build, like they're coming.
Yeah, because now you know, like, hey, okay. Yeah. But like for this one, this is one where, we contemplated this one and did a lot of research on this for a while. When you look at this one as a 6'5", there's a lot you can do here. And we stay pretty conservative. We know you can put more guests, but for this one, we just put 2 guests per bedroom. And this one is definitely hitting at the 15% rule, maybe a little bit more. It's because of a couple of these that are around here on the northwest side. And so if you truly believe in it, which we do, it works. The only thing with this is the furnishing costs are going to be pretty extensive. This is going to be about 50 to 75 to do it right. But when you get this furnished, there's nothing like it. When you look at the mansion, people are paying an absorbent amount. People are paying $dollars. The mansion. Go ahead.
Me. I was just saying I did the 15% on that and actually came out to 127.50, right? So you can actually think about it as if you're bringing in Airbnb is projecting this to bring in 186 grand on a yearly basis, right? You can kind of factor in the furnishing costs into that because you're already getting much more than the projected 15% of that purchase price.
Exactly. And literally what helps is that we have a landscape now of all these properties that we manage where we can actually compare. And when I look at the mansion, the reason people are paying minimum $1,350, and that doesn't include cleaning, that's just for the night rate, and then cleaning is another $800. So minimum $2,000 a night is because there's nothing like it, right? Like there's people that are coming and doing their whole family events. We had somebody stay this past weekend that paid, I think, like $8,000 for 3 days, right? And you don't need as many stays. You only need like the weekends, and the weekends are always booked. And then you get movie producers coming and all that stuff. Like we had a TV show that we were trying to get booked on there. They didn't choose us because parking was tough, but it was down to us and one other, and that was going to be potentially a $90K payday for 5 weeks, right? They didn't choose us because parking, so it made me like, man, hey, we can figure out parking for 90, but it's different. It's a different landscape that you're playing in when you start getting in those bigger properties.
Yeah. And even with the mansion, to piggyback off what you said, I've seen it in TikToks, the YouTube videos. There's actually a popular YouTube creator. AMP,
to that point, if you haven't seen it, anybody. So Kai Sanat, do you know Kai Sanat, this Twitch guy? So he was there. Somebody sent me a video like, "Hey, is this the mansion?" And I was like, "Yeah, he's on the pole." so that was him. We've had DC Young Fly, Mike Epps, Usher. We've had a couple people at the mansion.
This is the one that you manage, right?
Yes.
It's star-studded.
Yeah.
And it's crazy. Like some of the stuff we don't even know until like weeks later, and then we see a video. It's like, oh yeah, this is definitely, I recognize this. Like, hey, I've been there before.
Right. And I'm just so curious, right? Like I'm sure the person that's in that play, like they own the property, right? Like you're managing for the people that own the property. So that's you gotta have a lot of capital to get into that deal, right? Like if it's one, group or one person, like that's not even a play someone at this level is really considering, right? Like I just want to kind of understand, like, is that something I should be thinking about? Like,
this is something you build to. This is something you build to, right? That individual, it's a complete different ballpark, and we helped them buy that house, right? And then we helped them. You were there throughout the whole process, so you know the whole process, right? And it's one where it's something that we can build to. It's something to aspire to. It's almost like the whole, buy the little greenhouses so you can trade it in for the red house. In Louisville, I bought all these small apartments that are 1920, so we can trade it in for a brand new storage and a brand new, 105 townhome units. Now that's zero maintenance. This is going to be the newest thing on the block. We don't got to worry about anything, right? And then out here, we're buying all these houses and acquiring all this with the hopes to one day sell them kind of in a collage and go get one of these, because this makes a heck of a lot of sense. If you're going to make, $35K in a month off of this, just managing one property and, maybe 4 or 5 guests in a month, I'd much rather do that than 20, but you've got to use the 20 starting where we started before you can get to that point to trade it all in. But that's why you keep staying consistent and buying good properties and getting the highest and best out of it. It's not necessarily for the cash flow right now. You want to drive that equity up so you can transform that into something else. And that's kind of the way I look at it.
Reach.
But guys, this has been an awesome session. And AJ, you kind of preempted one that we're going to do at some point, the 15% rule. We're definitely going to dive deeper into that. But we appreciate the foreshadowing. And I look forward to seeing you guys next week, man.
Of course, man. Look forward to see you guys next week. Keep an eye on Bitcoin.
I know, man.
Hey, listen, don't say it. Don't say it. I think I was one of them. I'm not going to say I told you so, but I'm pretty sure we had a call and I talked about this maybe about a year ago. So
I bought it at 60 and I sold it when it hit 30. So I lost. So I should have held on. That was at like 70 or something.
It's at 73 right now and climbing. So it's still not too late. You heard it?
Nah, man, I'm done. I'm done with Bitcoin, man.
Okay. I tried.
I'm telling you, next week,
hilarious.
I'm coming with better internet. I'm telling you, I'm changing the wall now. I'm telling you, we went to Home Depot, we got it. I'm installing it next week.
All right, y'all. On that note, I bid you good night.
All right.
Join us every Wednesday at 7 p.m. Eastern as we explore different types of investments that can fast track your path to financial